Hey everyone, this is a short and a simple video of what is stochastics. In this video, I will briefly talk about stochastics and what is the correct way to trade stochastics in any market conditions. Simply put, stochastic measures the momentum of price. Stochastic oscillator is a technical indicator that moves back and forth between 0 and 100, providing a gauge of momentum. This indicator is used to identify overbought and oversold points in the market. I will not be going through the formula and discuss how stochastic is calculated as it is fairly complicated, and to be honest, all you need to know is how to use the indicator. When the indicator is near zero, it shows the price is trading near or below the lowest low during the look back period. Similarly, if the indicator is near 100, the price is trading near or above the highest highs during the look back period. Stochastics is considered overbought when it is above 80 and it is oversold if the indicator is below 20. One of the common mistakes that traders make is they believe if the stochastic is overbought, they should sell, and if it is oversold, they should buy. Well, keep in mind that overbought does not necessarily mean the price will drop, and oversold does not mean the price will rally soon. Now that you have an understanding of what is stochastics, let me talk about how you should trade stochastics as an indicator. Well, it's simple. Trade with the trend. So what does that mean? Let me explain. In order to increase your probability of a trade using stochastics as an indicator, you got to keep in mind these four easy steps. If you want to sell a currency or a stock, you should ensure that the market is in a downtrend first. Then you need to wait for a pullback. At that point, you need to check whether the stochastics is in an overbought position, which is above 80%, and check for any resistance level, previous resistance level at this point. Let me share that. Let me show you this with a clear example. Also, keep in mind that when market is in a downtrend, then you look for overbought areas. Let me show you this with a very clear example of a live chart. So here is an example of the Aussie dollar daily chart. As you can clearly see that the market is in a downtrend, right? Then you wait for a pullback. As you can see, there's three examples here. First, the market is going down and then it pulls back. And then again, as a second example, it goes down and then it pulls back again. And then again, it goes down and then it pulls back. Then you need to see at these points, stochastics is in an overbought position. In all these three cases, the stochastics is overbought. And then last point that you got to keep in mind is that there should be a previous resistance or a support level. In this case, you can see the market here, then there's minor support here or a resistance. Over here you can see very clearly, and here as well. Even in the second line, you can see over here there's a support which is now turned into resistance. And over here also there's a minor support area turned into resistance, and similarly over here, previous support. Even in the third case, there is a support level.
Now let's talk about how will you buy a currency or a stock using stochastics as an indicator. Again, you got to keep in mind these 4 points which will help you increase the probability of a trade. Again, as I mentioned earlier, you have to trade with the trend. So when you are going to be buying using stochastics as an indicator, make sure that the market is in an uptrend. And then you wait for a pullback and then see when the stochastics is in an oversold position or below 20%. And then check if at this point, if there is any support level. When the market is in an uptrend, then you look for oversold positions, oversold areas. Let me give you an example based on a US dollar yen pair on a 4-hour chart. You can clearly see in this case that the market is in an uptrend since the 200 exponential moving average clearly indicates that the market is in an uptrend. Then you look for a pullback. You can see these as the market is going up, there is a pullback in this example, as well as in the second case where the market is going up and then there is a pullback. At this point, you need to see what is the level of stochastics. Is it oversold? Yes, it is. Even in the second case, you can see it is oversold, which is below 20%. And then you check for any support level or previous resistance. In the first case, you can see there's a minor support here. This was the previous resistance, which is now turned support, and over here as well. Similarly, in this case, also you can see that there is a support level, which was previously a resistance here. Similarly over here, a minor one, but you get the idea. So that's it, folks. I hope you liked my video, and please feel free to subscribe or give me a thumbs up if you like this video. Thank you. Bye.